Welcome to this video, which is all about how to trade Forex successfully for beginners. And what we're going to be doing today is looking at one of the key basics for trading success, which you need to learn and understand so you can execute your trading strategy correctly and, of course, your trading signals. What you need to understand is the relationship between process and outcome. And what you must do is basically make process more important than outcome. Now, in terms of trading the markets, I've often say you obviously need to get probabilities on your side. Okay, however, probability on its own is not enough to make a strategy successful. In fact, the highest probability trading strategies are actually the ones that lose. What you need to do is focus on a reasonable probability or even a low probability on trades that have what we call skewed payoffs, i.e. the reward is much bigger than the risk. Now, in terms of, most traders coming to markets obviously want to win the majority of their trades. It's futile. Don't even bother. For example, I've done research on this. I could probably win 80% of my trades. Okay, give you an example. I would do strong moving market, go in and out for 10 or 20 pips, use average true range as a stop, let's say 100 pips. I might win the majority of my trades, but when I get caught on the losers, I'm just going to give back all my profits. You don't focus on the amount of trades you win, okay? You need probability on your side in association with the payout, okay? This will become more clear as we go through the video. I just want to go through a quick summary of probability, payouts, and also the importance of process over outcomes. So just coming up on a quick storyboard with 4 key tips from Robert Rubin to keep in mind when you're trading the markets. Let's just take a look at this quick storyboard, then we'll be back to discuss in more detail. I'll go back up that short summary there. Now, in terms of what every winning trader knows, it is process over outcome. If you follow the process correctly with your trading strategy and execute it correctly, you're going to make money longer term. Now, in the intro to this video, I just gave that little example about, being right a lot of the time doesn't mean you're going to make any money. So the one thing you need to understand when you come to the markets is you're going to be wrong more times than you're going to be right. That's the attitude that professional traders have. There's very few professional traders that win more trades than they lose. I'll give you kind of a couple of examples. Let's take long-term trend following or position trading. There's very successful traders who can basically win 20% of their trades, make a lot of money. So that means they're losing 80% of the time. In terms of successful shorter term traders like breakout traders, swing traders or range traders, they can make money 40% to 50% of the time. So they're still losing half or more than half of their trades, but they're coming out ahead. Okay? They understand probability against payout. You need to understand it if you want to make money in the Forex markets. A lot of beginners though come in with psychological problems. We've all got the psychological problem of we don't like to be wrong. So make a trade, it goes wrong, we think we've done something wrong. In a probability-based market and a market that's uncertain as the Forex markets, that's always going to happen. It's always going to wrong foot you. As long as you've done the process correct, it doesn't matter. Got a trading strategy with an edge. That edge is going to work longer term to give you the payouts you need to cover your losses. And I think in terms of, when you come in the markets, always do your research and get a strategy that you understand the logic of, okay? You've got to have rock solid confidence in your edge. Why you're going to win when 90% of traders lose. Or you'll never follow the strategy. You will let losers run. And, certainly when you get profits, always the temptation to snatch them in early. Because, you're worried they might get away. They could turn into losses. Very important to do your research on your strategy. Now, it can be very simple, but you need to have real confidence in it to follow it, in a disciplined fashion. And I think, in terms of, talking of strategies, you've also got to get a strategy that kind of suits you, your personality as well. So if you're a patient trader, you might like position trading. If you want a bit more action, or you're a little less patient, then it's going to be like swing trading or range trading. In terms of beginners when they come in the markets as well, they tend to be intimidated. They think the markets are basically manipulated by big boys. It's the hedge funds, the banks, managed money. That's got the real advantage in terms of all the resources that they've got. So they're going to be the most successful traders. Nothing could be further from the truth, because most big funds focus on outcome over process. Now you might think, why is that if it's obviously process over outcome? Well, you've got to think of their motivation. They need to make commissions. They need to trade frequently. So they're very often going to take trades which not only don't have great probability, they don't have great payouts either. They just need to turn over commissions. Also, they have to deliver short-term performance. So they will focus on keeping the fund slightly up if they possibly can, or slightly down. Okay, and they'll obviously want it slightly up, but they know that most investors will put their money in for 5 years. That's the normal holding period. And if the trader is slightly up or slightly down, he's still probably going to stay in the fund. What they don't want to do is basically, let's say, go for big payouts where they're going to have a period of drawdown that might last, let's say, a few months, because investors might withdraw. In terms of you as a private trader, you have a big advantage over the so-called professionals, and their performance is pretty dire. I've said it in numerous videos. Go and look at managed stock, futures, Forex funds. Best probably made 15% compounded over the last 5 years. That's the best of the best, okay? 15%. As a private trader, my belief is you can beat that easily. I know plenty of private traders who make 50 to 100% per annum with simple strategies, and just trading them with discipline, making sure they focus on process. If they do, they know that the outcome in the short term, can be variable, let's say, but over the longer term, they're going to have a really good outcome, which is going to be really good profits on their trading account. So, obviously my advice is focus on process over outcome, and just do not worry about losing trades, okay? It's part of the game in Forex trading. You're going to lose more than you win. Just look up what the professional traders say about this. And then, once you've got this idea into your mind, it doesn't matter. You basically can just take losses easily, which most traders can't do. Right, I think I've covered all the points I need to. That is the video for today. Take care. Have a good day.